Hello and welcome to the Tuesday Tidbit. This Tuesday Tidbit is, what is a piggyback loan? A piggyback loan, also sometimes called a combination loan or like an 80-10-10, okay? They're all the exact same thing. So a piggyback, a combination loan, an 80-10-10, they are all describing the exact same thing. So a piggyback loan is where a lender would do a first mortgage typically for 80% of the loan to value, so 80% of what the house is worth. They would then add a piggyback, a second mortgage, to that loan application. And they would do an 80% first mortgage, a 10% second mortgage, and then 10% down payment. That's why it's called also an 80-10-10. 80% first, 10% second, 10% down payment. Now, why would somebody do an 80-10-10? They used to be very, very common. Closer to 2008, when the housing bill popped and everything got kind of crazy, 80-10-10s were a very common vehicle. It allowed you, the consumer, to avoid mortgage insurance. Technically, you had two loans up to 90% combined loan to value, but since the first loan was not above 80% loan to value, mortgage insurance was not required. So it was a way to avoid mortgage insurance. Instead of having mortgage insurance, you would have a 10% second mortgage. It does require 10% down. Now, the government caught wind that lenders were doing this, okay? And they caught wind that lenders were trying to avoid mortgage insurance, give you better terms, do an 80% first, 10% second to avoid mortgage insurance. And the government said, we're not okay with that. Okay, mortgage insurance exists for a reason. It exists to protect the lender. Okay, if somebody started missing mortgage payments, that mortgage insurance would protect that lender. Okay, well, if you remove mortgage insurance, you're increasing the liability. Not only that, but those second mortgages, they tend to be interest-only loans. They tend to be an adjustable rate mortgage. They have, a couple downsides to them that could increase the likelihood of delinquency. So the government said, look, you can still do a piggyback loan. You can still do an 80-10-10 if you want. However, we're going to start to charge you a higher interest rate on that first mortgage, on that 80% first mortgage. The second the government changed that, everything changed. Combination loans, piggyback loans, they kind of disappeared off the face of the earth. They still exist occasionally, but they do come at the downside risk of, you're going to have a slightly higher interest rate on your first mortgage. That certainly reduced their viability in the market quite a bit. Most folks would rather just have mortgage insurance, kind of a nominal fee, get the loan paid down, get that mortgage insurance removed instead of having that second mortgage. And more importantly, having that higher rate on the first mortgage. Hope that helps. Thank you all so much. See you next time. Bye.